find this subject and this space so fascinating, especially after we spoke about that 2013, 2017, traders who were not able to evolve, not understanding how to evolve. Sometimes it was the fault of education, it was the fault of training, it was the fault of just being a one strategy pony because that's all you were taught. But seeing how humans excel just through antiquity for survival, almost a type of Darwinian evolution, is our ability to operate in highly ambiguous environments. And so when you get the global financial crisis, when you get George Soros pushing the Bank of England to the brink, when you get the 1970s oil embargo, when you get the European crisis, time and time again, you see discretionary traders outperforming on a magnitude of 10x to a normal month. And this is what Richard's discussing, our ability, and we're doing in our internal Blueprint 12-month coaching program. We're going to be having workshops on this hopefully in the early part of next year, of how you leverage our ability to think in this way and how do you actually employ it through what we'll be speaking about, especially next week. We're going to be sharing the actual architectural design, but this human element and how to scale the human, because it hasn't been tapped as far as it can really go. And this is what's so exciting if you create that learning ecosystem, again, which we'll be discussing in detail next week. But it excites me so much of what capacity we have. And so you have to embrace the complexity, embrace when things are changing, because I can tell you, you adapt to that much quicker than an algo HI machine learning systems.
Yeah, absolutely. And I've drawn a little kind of map of this. And one thing that we'll be doing next week is actually sharing the reality of executing this trade. So this is something I often talk to people about. If you can essentially draw the concept and explain the phases of a concept, when this happens for real, you know how to execute. You see this happening, right? There's my time. There's my chance to execute. And I'll be showing you an example of this next week of somebody actually executing on this type of concept and understanding what happens to algos, what happens to humans in terms of trading certain situations, and goes to beat this myth that humans cannot beat algos. Humans can beat algos. And the reason that humans can beat algos is because they understand what a change causes. And algos actually, I was talking to Alex about this before, about algos actually have an inbuilt fear, because anything that's not normal, algos see this as a reason to get away from the situation in the same way that humans do. That if you encounter a situation that you're uncomfortable with, you will try and get away from that situation. That's inbuilt. But algos have this inbuilt as well, that as soon as data doesn't match what they understand, the algos generally will turn off because they don't know what to do with the situation. Or they see this as a chance to then play that move back. And this is where they can get trapped. So take this as a little example. This is a range, break, and move. This would be something that would happen over a piece of news and generally happen very, very quickly. So you get a market trading in a little range. What you then get is this quick move out of range. So say this is a new piece of information that hits the market. Market will react very quickly to this. Now, I'm only using the one example of one side of algo trading. Some algos will react to the news, granted. But what you're going to get is you get this fast move out of the range. Humans immediately can see that data, relate the data to the current narrative, and know exactly why that's happened and whether this should generate a continuation move. So you already see in the next step. What algos see is a market that's been trading in a range, low volatility, not trading a great deal of distance, and it suddenly moves. The algos perceive this as outside of the normal, and so therefore the market should go back. So many algos are going to buy as the market drops because this isn't where it should be, and this is their mean reversion opportunity that they're looking for. What you then get is the bounce. Algos essentially have got this wrong. They're buying on the basis that the market has done something unusual, but they're wrong in doing this because the market isn't doing something unusual. It's doing something unusual compared to what it was doing, which is how an algo works. It works on the logic, on the data of what's just happened, and this isn't normal compared to what has happened. But There's a reason for this. And we understand that reason immediately. So when the algos bid the market back up, this is an opportunity to start to sell, because you can understand now this is your chance to get into the trade. You can sell into all that liquidity that the algos give you. And then as the market drops, because overall, humans and traders who understand the situation will overweight the algos. They push the market back down. Now the algos fear sets in. This again is not normal for them. This shouldn't happen. And so their response immediately is now get out. And the great thing about an algo is that algos are emotionless. They won't sit there and go, but it might come back like human traders might. If you've bought this area here and people think, it might come back, the algos won't. The algos will go on the basis that you shouldn't go this far down on the trade. Get out, get out, get out. And that accelerates the drop further. And so if you can understand the limitations that algos have, you can understand how humans can beat algos. Algos can't beat you. They can beat you at certain things. They are quicker than you. They can interpret more data than you. Accept that. You're not playing that game. Your game is to understand narrative and to understand where your own human discretion can identify a change much faster than the amount of data required for an algo to understand that shift. It is speaking very broadly of algos. I do appreciate that. I would say it's a bold statement. I think you have to be convicted in your view. Appreciate not every algo is going to trade in that way. I accept that. But by understanding what it is that inputs to an algo's decision making is still to understand that there is limitations in what they can do. That I'm talking more about how you understand your own edge in comparison to an algo's edge. I am using the example here of a mean reverting algo, of course, but in understanding how that can be played and how that impacts the way that you can execute, I think still illustrates the point that algos are not infallible and they can very much be beaten by humans.